It's time now for today's strategy session. Strategist at Barclays saying the market's next move will be higher, calling it the path of least resistance as institutional investors sat out the latest rally. So, could strong earnings results spark continued gains? Joining us now to discuss, Michael Reinking. He is NYSE senior market strategist. Michael, great to speak with you. I know you were mentioning when you first got to set that at least we've gotten the worst behind us. It seems like there's a little bit more momentum to the upside here, but to what extent can we continue to expect the market to rally as we head out of earnings season and there maybe isn't that much of a catalyst for growth?
Yeah, I think hyper waffling might be actually some foreshadowing for what we might see, kind of in the next couple of months. Look, I think we've had this pretty strong upside, kind of momentum move off of the lows. Really strong, kind of breadth as we saw that. And as we talked last time, we were looking for kind of a test of that 200-day moving average. The last time I was here, we did kind of overshoot that to the upside.
Yeah.
And then, kind of last week after seeing a 20% rally, we came and kind of pulled back in to kind of retest that level. I think that is a pretty good support level kind of beneath here, 57.75. And then you're looking at kind of a gap from the China detente, kind of just under 5,700. So I think, technically we're in for a period of a little bit of consolidation. We have some, pretty big potential catalysts, as we move through the summer, to work through in terms of, kind of the tax bill, the 90-day reprieve rolling off, right? So we'll have to kind of see how some of that plays out.
Sure.
As we're continuing to hear from companies who are talking about where they needed to front run any potential tariff impact here, and also what it's spelling out about their consumer and how they're continuing to navigate this environment. What is the health of the economy as assessed through some of the earnings that we've heard thus far in aggregate over the course of the season?
Yeah, so I mean, I think the last time I was here as well, we talked about this idea of BT and AT before tariffs, after tariffs,
Yeah.
right? And I think that Q1 earnings season, really kind of solidifies the idea that the economy and kind of corporate America was performing very well, ahead of kind of those tariff announcements during the first quarter. Now we're going to need to see kind of how things progress. Unfortunately, I think there's a kind of a third time period that we're going to have to work through. That's kind of purgatory, as we're calling it, right? Where we're having to kind of work through the pull forward of some of that demand, and start to see what the impact on pricing is, kind of from tariffs and how companies are going to react. So I mean, they've kind of told you, that they're starting to mitigate, finding finding ways to mitigate some of those cost pressures. I think corporate America has learned from kind of past experience, kind of coming out of COVID. They've really shown that they're very able to kind of quickly and dynamically kind of shift kind of supply chains and kind of react to these difficult environments.
Okay, so that's the company lens. What about for the Fed and the lens that they're assessing it through? Because we're going to get the meeting minutes today. What is the tone that you expect them to have acknowledged at least at their most recent meeting?
Yeah, so I mean, the issue for the Fed is that kind of the potential impact of tariffs kind of puts their dual mandate kind of at tension with itself, right? And they're going to be kind of stuck in this period of time where they need to assess what the impact on prices will be, whether that's kind of a one-time impact. It's going to take a little bit of time for them to do that. They've pretty kind of consistently told you that they're in a wait-and-see mode at this point, and I don't think that's going to shift unless we see a very, very significant kind of slowdown kind of on the job side of the dual mandate, right? But until we were to really see that, which we haven't seen any signs of, if you look at the claims data, the non-farm payrolls data, right? Nothing's really suggested that has shifted, and until we see that shift, I think they're going to just continue to be in this wait-and-see stance.
And we talk about earnings, we talk about the Fed, and the reconciliation bill, or the big beautiful bill, excuse me, but mixing up my administrations. But I'm curious about whether or not it really all comes down to tariff policy at the end of the day. We saw the huge move to the upside off of the president's announcement that the EU tariffs were not actually going to be as severe as initially teased out. Is that going to continue to be the driver of significant gains in the near term?
I mean, I think, at this point, markets seem to be a little bit desensitized to kind of some of those trade headlines, right? I mean, on last Friday, when we did get the initial EU headlines, markets sold off a little bit, but I mean, it was a pretty muted response in general. I think there was the idea that we weren't going to actually institute 50% tariffs on the EU. So I think we're getting a little bit desensitized to some of those headlines. The issue would be is if we really start to see those things kind of ramp back up. But it seems that the administration is sort of looking for kind of that off ramp, and it really seems that it's very transactional at this point, where the administration is looking to do business right around the globe, and it's become kind of this very transactional in nature.
Sure.
Michael, good to see you this morning.
Thanks for having me.
How's the tone at the NYSE? Everybody okay down there after the Knicks loss?
Yeah, I was going to say, I was a little relieved that we're kind of open around unchanged. Yeah, definitely some downtrodden folks on.
Well, you got to a bright-spirited place over here for the morning at least. Michael, good to see you. Thanks.
Thanks for having me.
Thank you.